Imagine someone stealing £170 million from you, and the culprit is eventually fined a tenth of that sum, having spent all the rest of it elsewhere. Well, that's how Derby County and their fans are probably feeling following the EFL Financial Fair Play verdict against QPR. On the 24th of May 2014, in the 90th minute of the Championship playoff final against Derby County, Bobby Zamora scored the only goal of the game to achieve promotion for Queen's Park Rangers. Had QPR complied with FFP properly, it's highly unlikely that Zamora would have been part of the QPR team, after the club was relegated the previous season from the Premier League, along with the likes of Rob Green, Jerry Barton and Neda Manoa on big wages from the higher division. In the 2013-14 season in the Championship, QPR's wage bill was £195 for every £100 of income the club generated, even though the club earned over £28 million in parachute payments. The wage bill of £75.4 million was only £3 million less than that of the previous season in the Premier League. The average total wage bill that season for the other 23 clubs in the Championship was £19 million, a quarter of QPR's. QPR's accounts for that season revealed that QPR Holdings Limited made an operating loss of over £65 million, which works out at £178,000 a day. So, what about financial fair play, the rules which were supposed to prevent clubs from spending too much money on players and wages? Well, under FFP rules for that season, the maximum loss allowed by a Championship club was £3 million, or £8 million if the owners made up the difference. Clubs that broke these rules were either subject to a transfer embargo, which has impacted the likes of Leeds United, Blackburn Rovers and Nottingham Forest in that division, or if promoted to the Premier League, a financial fair play fine/tax is payable, with the proceeds going to charity. Under EFL rules, the fine was based on a sliding scale until losses exceeded £10 million above the financial fair play limit, which works out as £6.7 million fine, and then 100% of the losses above this amount. Under these rules, we estimate that the QPR financial fair play fine would have looked something like this, and it works out to be about £46 million. The QPR approach was initially one of creative accounting. The owners wrote off £60 million of debt due to them by the club, and this was offset against the losses in the profit and loss account, meaning that in the eyes of the club, the loss was only £9 million and that there was effectively no financial fair play tax to pay. This approach was presumably rejected by the EFL as it makes a mockery of the rules, which were aimed at preventing owners trying to buy promotion through their own personal wealth. QPR's owners, including Tony Fernandes, whose estimated wealth is $745 million, Ruben Ngallinga, $800 million, and Lakshmi Mittal, $18.6 billion, then took a different approach. There was no reference to financial fair play in the 2014 accounts, but a year later, hidden away in the footnotes, was a reference to QPR challenging the legality of the FFP rules. After that, not a lot happened, apart from time passing and the advisors on both sides clocking up huge sums and fees as they argued over the small print. Dragging out a ruling is a classic ploy, raising petty objections and requesting further information that they know will take time to produce, with the sole aim of delaying any potential decision and therefore payment, hoping that the other side loses the will to keep on fighting and will settle for a smaller sum. I have a friend who is a tax accountant in Swansea. If he knows a client is likely to have to pay more tax, he writes an appeal letter in Welsh, as he knows that there are relatively few people who speak the language at HMRC, and so it will take a long time to reply, which will drag out the time until the payment is made. However, if a rebate is due, he writes it in English to elicit a speedier response. Sources close to the events advised priceoffootball.com that a compromise deal was likely, with QPR likely to pay a much reduced fine, with both sides claiming a victory. Rumours were that at EFL board meetings where the matter was being discussed, the members became so nervous that no minutes were being kept on the topic, for fear of this being used by the opposition to further find minor points to quibble about. An independent arbitration panel was created, with both parties seemingly committed to agreeing the final decision. In October 2017, the arbitration panel published their decision ruling against QPR and fining them £40 million, and QPR instantly appealed to further delay any cash being paid over. We now have the final ruling. After a carefully worded press release from the EFL, the main points being made are the following. QPR have dropped their objection to the previous ruling. QPR have been fined £17 million as a financial fair play tax, but it's being paid in instalments over 10 years. They're under transfer embargo in the January 2019 window, and they have to pay the EFL's legal costs of £3 million, plus presumably their own. QPR's owners also converted £21 million of debt into shares, and the financial fair play fine will be excluded from QPR's losses when calculating this year's figures. So, is that a fair settlement? Well, as a result of being promoted, QPR earned £148 million in broadcasting income and parachute payments between 2014-15 and 2017-18. Derby fans will no doubt take the view that this money could have been theirs had QPR not flouted the rules. The debts of QPR's owners were effectively worthless as the club had no means of paying them back, so converting one piece of junk paper in the form of debt to another in the form of shares is accounting sleight of hand and no more than that. The aim here is simply to make the headline fine in the media reports appear far larger than it is in reality. If, as is rumoured, the £17 million fine is being paid over 10 years and using an inputted interest rate of 7.4% per year, the cash cost of the fine to QPR is the equivalent of £9.46 million had it been paid by the club when the FFP issue first arose in 2014. As for the transfer embargo, well, the club has had sufficient notice to accelerate signings by a few months, and the terms of the embargo are more along the lines of one player in, one player out, rather than the inability to sign anyone, so this is a light tap on the wrists, along with the rest of the ruling. So, for any other clubs thinking of showing two fingers to the FFP rules, the EFL has shown about as much backbone as a jellyfish.